Hello everyone. Welcome to today's webinar on GSTR 9C preparation in a most accurate way and the quickest way. My name is CA Venugopal Gala. I'm a practicing chartered accountant. I've been in practice since 20 years, specializing in the area of indirect taxes, GST and technology. Today's session is about how to prepare GSTR 9 in the most accurate way. If I have to tell all of you that GSTR 9 is definitely not new to us. We have been preparing it, and I would say that it is 4.5 years where we have seen the form GSTR 9 and how to prepare, right? Now, the challenge which people face while preparing GSTR 9 is getting the right values, accurate values. Because we know GSTR 9, once if it is prepared and if it is filed, you cannot correct it. Yeah. So that is why it is definitely required. It is everyone's in their own interest. They need to find a right way of preparing. Yeah. So today we are going to have a demonstration of a tool which will ease you in preparing the GSTR 9 and 9C. Yeah. On this notes, let's begin. And what I'm going to cover is we will be spending first 30 minutes in getting the understanding of the form, like the right content that needs to get into the form. And we will also see how these values can be automatically derived. Feel free to interact. If you have any questions, put your questions in the chat. I'll be taking those questions at the appropriate time. You can unmute yourself and talk at the end. And as we are doing the demo, you might also get a question as to how do we handle in this circumstance. Right? Let's start with basics of GSTR 9. On to the legal provisions, everyone know. Section 44 read with Rule 80. It is mandatory for every registered person to file an annual return GSTR 9. In case of a composition dealer, it was 9A, e-commerce operator 9B, which are currently not there. The set of people who doesn't need to file the annual return is ISD, TDS, casual taxable person, and non-resident taxable person. These people doesn't need to file the GSTR 9. The due date for filing the GSTR 9 for the financial year 21-22 is 31st December. So by 31st December, which is exactly a month from now, you got to file the annual return. Now, I said every registered person, however, we have exemption. So people whose aggregate turnover is up to 2 crores, it is optional, they don't need to file. Those who are with 2 to 5 crores, it is GSTR 9, a mandatory document. Above 5 crores, along with 9, they need to file GSTR 9C. Couple of points. GSTR 9 is an annual return. If you do not file it, whose turnover is less than 2 crores, do not file it. It's like deemed to be filed. Whatever the data which is auto-populated by the portal, that will be deemed as if it is filed. That's the annual return. In my personal opinion, even though wherever you do not have an applicability of GSTR 9, please do file your GSTR 9. I would say GSTR 9 is a last option to explain what is your turnover, tax liability, ITC availment for a given period. Given that this is the last option, it is even more important that you file it in a more right way. Just to give a perspective or understanding of our annual return is divided into 6 parts, very beautifully drafted form. Part 1 is the basic information. Part 2 talks about liability, which is divided into 2 tables, table 4 and table 5. Table 4 contains the transactions on which there is a tax liability. Table 5 contains the transactions on which there is no tax liability. Put together, my total liability is computed in part 2 liability, table 4 and 5. After my liability, ITC is computed and reported in 3 tables, part 3, table 6, 7 and 8. Table 6 is the ITC that has been availed. Table 7, the ITC that has been reversed. Table 8, the most important table, which is reconciliation with GSTR 2A. Then comes, after the liability and the tax paid, the tax, net tax payable and paid, which is your part 4 and table 9. Ideally, my annual return should have completed with this. However, we know the concept of revised return doesn't exist in GST. If you made a mistake, you will only amend it in your GSTR 1 of the subsequent month or GSTR 3B of the subsequent month. If you have paid less taxes, you will pay it in next month. If you have paid extra tax, you will adjust it in the next month. Any errors, you will be correcting it in the next month returns. These corrections could have creeped in and moved to the subsequent financial year. So we also have this provision where the correction of the returns to be done by September return, which is due date in October. That was the provision which was there. This provision from the financial year 21-22 has been extended till 30th November. That means my liability which had erroneously that I could have corrected. So a liability which I have not reported, short reported, wrong reported could be corrected for R1s that are filed up until 30th November, which is tomorrow. If an ITC that needs to be availed or reversed, I can correct it using GSTR 3B up until which is returns filed tomorrow. And please note, it is not November return filed some date, returns filed up to 30th November. A March return filed tomorrow will also do a return of the earlier months filed up to 30th November would do, right? On this note, the corrections that have carried in the subsequent period would be reported in way of part 5. Then government wants an additional information. The additional information is captured in part 6. This is a broad understanding of your annual return. I would only urge the participants to know where the reporting has to happen and there cannot make any errors. Likewise, wherever 9C is applicable, where the turnover is more than 5 crores, you also need to understand how 9C is structured. In fact, this is also another beautifully drafted form where it was originally to be signed by a CA or a CMA, but now it has become a self-certified. In fact, the moment a document which becomes self-certified, it is even more onus, responsible on the SSE. It is responsible on the SSE that he has to give a right information. In a while, I'll explain you why. Earlier, the wordings were to the best of my knowledge. That has been omitted in the verification clause. To the best of my knowledge has been omitted. My knowledge and belief has been omitted, which means you got to file an accurate information. That is the expectation of your GSTR 9 and 9C preparation by the taxpayer. 9C, earlier we used to call it as the GST audit document, which is a self-certified audit document. Again, look at the concept of 9C, the context in which this has been drafted. The intent of 9C is to ensure whether the right taxes that needs to be paid has been paid or not. Let us first understand the contextual difference between 9 and 9C. You have GSTR 9 on one part and 9C on another part. 9 is a factual reporting of the information. Using GSTR 9, you cannot discharge additional liability, nor you can make a refund of the extra taxes paid. You cannot avail an input tax credit nor reverse an input tax credit. Using 9, you cannot. It is a statement of the fact. Statement of the fact of what? The tax liability that has been discharged, turnover on which the taxes are paid is reported. Input tax credit availed or reversed is reported. Now, when I say tax liability paid, the payment could have happened using GSTR 3B or DRC 03. So the information is captured using DRC 03 or GSTR 3B. So the taxes that have been paid using this two medium will be reported in your GSTR 9. So GSTR 9 is a statement of the fact. If you have a tax liability and you intend to say that this is my tax liability and you have no intention to discharge, you will not find a place it in your R9. Contrast, your 9C is going to talk about what is your liability, what is your ITC, how much you paid, how much you have not paid is what it is going to talk. If I have to talk in a layman language, if government is saying that every month they have currently 1.5 lakh crore collection, that means so much cash they have got it. Or a businessman, every month they have to pay GST, they would be looking at what is the discharge of the cash that they are going to do. So if I have to say my liability, if I am saying my liability, if I am saying my liability that is discharged, what we are talking about that is the cash that is discharged. But how does this come? Like, how do we get in a layman language? How do we say? So the cash, I would say it is gross liability minus less ITC. Gross liability minus ITC. But how do you get your liability? Gross liability, I will say you can always use this, which is your turnover multiplied by rate of tax. Your turnover multiplied by rate of tax is what when we say the gross liability turnover multiplied by rate of tax. And when we say turnover, am I talking about all the turnover? No, when we are talking turnover, it means we are saying taxable turnover. We are saying taxable turnover. Not all turnover will have GST, right? So it is only taxable turnover. Now, how do you get your taxable turnover? Your taxable turnover, you can easily again say gross turnover minus exemptions. Gross turnover minus exemption gives you taxable turnover. Again, this is how you compute. This is how you compute when we say the liability, you compute this. And when we talk about ITC, what is the ITC we are talking? When we say ITC, we are saying not all ITC, we are only saying ITC that has been availed, and such availed ITC should be eligible ITC. The difference between liability and an ITC, liability, whether or not you have paid the taxes, that's a liability. When it comes to ITC, only when you have availed, which means you have reported in your GSTR 3B, only then it is ITC. Look at how beautifully the GSTR 9C form is designed. Government intends to get all this information. Let's look part 1, which is basic information. We'll come to part 2, other tables. You want to capture your gross liability. The gross liability which you want to capture is captured in your table number 5. All the gross liability is captured, gross turnover is captured, sorry, not gross liability, gross turnover is captured in your table number 5. If that is not what the turnover that is you have reported in your GSTR 9, you give your explanation in table number 6. Your turnover in table 5 and explanation in table 6. But what you are interested in your taxable turnover. The taxable turnover is computed, gross turnover minus exemptions is computed in your table number 7. And that is the turnover on which you should have paid taxes in your GSTR 9. If you have not paid taxes on that turnover and there is a difference, you will report that differences, reason for differences in table number 8. But however, you are interested in your liability, which is this turnover multiplied by rate of tax. This information is captured, this information is captured in table number 9 of GSTR 9C. And if this is not matching, you will give the explanation in table number 10. Owing to all these tables, if there is any liability that is arising, this liability is captured in table number 11. Likewise, to check your ITC that has been availed or not, you will report it in your table 12. How much is there in your books of accounts and how much you have availed, you report in table 12. Something like your bank reconciliation. If there is any difference, you will report those differences in table number 13. But what you are interested in is an eligible ITC. Your eligibility ITC is captured in table 14, and any difference, if any, is explained in table 15. Owing to all these tables, if there is any liability that is arising, you will be capturing it in table 16. And finally, the liability that needs to be discharged, you will be discharging in your part 5, part 6 of your 9C. Very again beautifully summarized form, right? So it's very important that one understand the way 9 and 9C is designed. Yeah. Now, how do I fill this? What is the source of the information? For filling this information, from where will I get my GST values? Now, your source of this is a common question people always ask. Where is my source of information, from where I am going to get the values? Now, getting the values for GSTR 9, in my view, is the most important thing, because the values are all around. When I say all around, what does that mean? You have the value, it is there in GSTR 3B. You have the value which is there in GSTR 1, GSTR 2A, books of accounts, last year you filed annual return, all those things. So if you look at the source of information, the primary source of information, it would be 3B, 1 audited books of accounts and 2B. That's not sufficient. Just with this, it is not sufficient. You also need to have your additional information. What is your additional information that you need to have? The additional information that you need to have is the GSTR 3B of the next year and GSTR 3B of the current year. Then the additional information that you need to have is the notices that you have received from the department and what is the action that you have taken, the refunds that you have claimed, the GSTR 9 of the previous year, DRC 03 tax payments. So you need to have all this information. You need to have all this information before you take an action, before you take an action of filing of GSTR 9. Both the primary information and additional information is required. You've got to have this. So you got to have the understanding of the form. You got to have the understanding of the form. You need to have all the information readily available. On top of it, you need to have a very good software, a software using which you can compute the data. So today I'm going to do a demonstration of the GSTR 9 preparation using Tally on Wheels. You need to have again a tool, something like this, which will simplify, ease your life. Before I go there, let's understand values. Where like we understood the form at a global level. Let us get into a micro level. First, how do I freeze my turnover? Your turnover for the purpose of GST can be there anywhere. Either obvious thing is credit side of the P&L, but include other income also. It could be reimbursement which you are netting off against the expenditure, could also be a turnover for the purpose of GST. Sale of fixed asset is there in your fixed asset schedule. Books of accounts, you would have captured only profit or loss on sale of asset. Credit side of the balance sheet, advances received from the customers for services you still have to pay. Of course, goods notification 66 has eliminated that. Some things which is not there in the books of accounts, schedule 1 transaction, stock transfer. even that has to be included. So the software, the Tally on Wheels, provides you to capture all this information. That is the beauty. That is why I said you should have a software. Now, after capturing all this information, what do I do? Find out how much is taxable, how much is not taxable, because something might be there as an income in the books of accounts. If you're a proprietor, you might have offered it separately under various sets. Get a hold of the data and see whether these certain receipts are taxable, not taxable. Get a fair understanding of it. The first and foremost thing is segregate the books turnover between various GSTN, GSTN 1, 2, 3, all those things. In fact, whatever I'm showing you in the slides, the same workflow is what even the Tally on Wheels is going to give us an output. Segregate the turnover GSTN wise. Once you have segregated the turnover GSTN wise, you do these adjustments, because the revenue recognition for the books of accounts is different from the time of supply of the GST. Section 12 and 13 gives you a different value versus AS9 revenue recognition. Do these adjustment from the turnover which you have carved out from the PAN based to GSTN based books turnover to the GST turnover. After doing it, you need to do a multiple reconciliations and report segregation. Reconcile your R1 with books, R1 with 3B. This turnover between interstate and intrastate, tax, IGST, CGST, SGST, rate wise, party wise, how much is B2B, B2C, export, everything. All these segregations that you need to do. For filing your R9, this information is must. So how do I prepare it? Same turnover which you have derived in the previous slide. You put 5%, 12%, 18%, how much? That is one section. How much is taxable, exempt, zero rated? Put it another section. Then you need to have, if 18% or 8%, 5%, you of that how much is B2B, B2C, even this segregation is also very much important. This information you got to compare with GSTR1 and GSTR3B. Then you derive how much taxes that you have to pay. Have you paid it or not? If you have not paid, then you got to correct this and you have to pay it by November of this financial year. By 30th November 2022, you got to pay the taxes using DRC 03. You got to pay it using DRC 03. Now, when I'm saying DRC 03, you got to pay using cash only. You got to pay only cash. There is very there is a very exceptional edge cases where you can pay through ITC also. DRC 03 annual return. What I can pay? A turnover on which taxes are not paid, pay it now. I have made an excess claim of ITC which I need to reverse, pay it now. Ineligible ITC avail, pay it now. Anything, some interest that is coming, pay it now through DRC 03, and you can report it in your R9. What you can report is the taxes that are paid or payable using GSTR 3B and DRC 03 is what will be reported into your GSTR 9. So the reporting of GSTR 9, how do you do it? Like the table 4 has multiple sections, 4A, 4B, 4C, multiple sections where the earlier derived values you will have to segregate and put it into this way, which again I'll be walking you through the tools table 4, table 5. The other information that you need to cross check is you have filed your TDS returns. What has been the value of the turnover that you have shown there? You file your income tax returns. You have 26 years. Check all those information and also ensure there's a cross verification of the turnover that is available at other sources. Moving on to ITC, the 3 tables, table 6, 7, and 8. And in 9C, table 12 and 14. These are the tables which I have explained. So what is that you have to do? You have to freeze your ITC. How much of the ITC which is there in your books of accounts is subjected, is availed? So before that, you got to segregate your expenditure which is there in the books. How much is with GST, how much is without GST. Those which are with GST, segregate as how much is eligible and ineligible. And when ITC is without GST, how much is exempt or non-GST, or how much is the reverse charge liability. Again, Tally on Wheels software will help you to extract all your vouchers which is there in your books of accounts and compare this, how much of it is matching, not matching. I'll again show you how this happens. So what is more important for us is how much of the value of the expenditure is without GST, how much of it pertains to RCM. This is again, I would say, an important benefit when you use a tool like Tally on Wheels to extract and tell you if you have missed out something now. And those ITC which is eligible, we know something is definitely towards taxable supplies, it is available, and not taxable supplies, this is exempt. So Tally on Wheels report gives you a line item wise of the ITC, and it also has a facility to reconcile with the GSTR 2A 2B if you want. Even that reconciliation is there. And time limit to avail, as we said, 30th November is the time limit. So the reconciliation report that you get it, I always say use a software so that you can correct the mistakes early. So if everything is matching, you don't need to take an action. This is the reason why you need to have a software in advance. Is if the credit is appearing, it is there only in the books but not in the portal. So you got to ensure we had till 31st till 31st December 21, you had this 5% facility under 36 sub rule 4. After that, it is only an invoice based value present in GSTR 2B. So you need to have a tool which will give you this information. If there are credit which are there only in the book portal and not in the books, even that you need to be worried at. Why did it not been accounted? So that information you will be getting using the tool. And wherever you have to reverse ineligible, not paid within 180 days, 42, 43, this you got to do the computation. And ineligible, I'm sure everyone are aware of it, 17 subsection 5, which is a blocked credit. I'm not getting into details of it. Rule 37 gives you the requirement not paid within 180 days has to be reversed. The final reconciliation with the books is whatever which is there in 7J of GSTR 9. That is what should be there in the books. But I might have availed it in the next year, which I will report it in table 13, add that since my 7J is less. I have erroneously taken and I have reversed it in the next year, reduce that. This value should match with the ITC as per books of accounts. You also got your freeze your reverse charge liability because you have 9 subsection 3 list of services, 9 subsection 4 in case of construction industry. 9 subsection 3 has host of liabilities when it comes to service. I have only highlighted those which are in blue color are something common. People, when you say reverse charge, they only talk about GTA and the legal, but there are many other services. Time to time, the services got included. So you got to check, especially indirect expenditure in your books of accounts, these items that would be lying. And goods generally not much applicable. How do I report and reconcile? You got to ensure that you report your liability in table 4G of R9. Avail the ITC if it is purchased from unregistered in 6C and registered in 6D. So the control that you need to have, the value in 4G should be higher than the ITC. ITC cannot be higher than the liability of RCM. Likewise, in my 2A is RCM L, yes, it would be shown. That value should be reported in 6D. You cross check that. What are the adjustments that you will be doing it? Is if at all you are paying taxes subsequently using DRC 03, that you will be reporting the taxes paid using DRC03, that you will be reporting in table 4. The taxes paid in 3B, please note the taxes paid in 3B alone will come to table 10 and 11. The DRC03 will be going to table 4. So regularly paid in 3B till March 22 goes to table 4. Paid in 3B after March goes to table 10 and 11. And whatever is paid through DRC03 would be going to table 4. This is the broad understanding of GSTR 9 in terms of reporting and reconciliation. Let us see some relaxations that have happened. Okay, just before that summary, final turnover is table 4, 10 and 11. Tax liability is table 9 and table 14. What are the changes that have happened in the current year? In this period, first and foremost, the government is saying debit notes, credit notes should be reported separately. It cannot be netted off. You just can't take the turnover which is there in the books of accounts, show it in table 4A or 4B of R9. That is not permitted. Till last year you have done fine, but now you should not do it. Again, so when you use the Tally on Wheels software, it will extract the R1 line wise and give you a summary of it. We'll again see a demo of it. Exempted turnover, the exempted and nil can be merged, but non-GST has to be in 5F. You can't merge that. RCM from unregistered and registered should be segregated. HSN wise reporting, table 17 is mandatory. Table 10 and 11, you got to ensure that this is matching with your subsequent your GSTR 3B payments. In case of ITC in table 6, you got to show what is capital goods. Input goods and input services you can merge. Table 18 HSN wise inward, it continues to be optional. Yeah. But with regards to 9C, the table 12 was earlier optional. Now they said it is mandatory. Again, I said there is a change. So to the best of my knowledge and belief is omitted. That means you need to file your R9 accurately. It has to be more precise and accurate. You can't make mistakes. Yeah. Table 5 of R9, they say if you can't segregate, you continue reporting it in 5O. Table 14 expenditure wise, if you are unable to segregate, you can merge. But however, clause 44 of tax audit, that was not optional, that was mandatory. So you would have already reported something in clause 44. You can use that. Yeah. And 9C is not a certificate, so auditor recommendation, which is in part B, that has been omitted. So these are the reporting requirements of GSTR 9 and 9C. Let's look at the demo, how this information can be used and how we can use a software like Tally on Wheels for you to file your GSTR 9 9C. So before I go on to the demo, are there any questions to anyone? You can ask the questions. If anyone have a question, we can take the question. Else we can go to how a software will help you in downloading all the information and automating the process. And by the way, if you find the anywhere, if I am somewhere speed and you missed out, put your question in the chat, I'll take it. And this session is being recorded. You will get the copy of the recording so that you can go through it at leisurely also. And the copy of the presentation material will also be shared. All right, let's go to the demo of GSTR 9 preparation using Tally on Wheels. Yeah, so Tally on Wheels, this is a web-based software which will help you to prepare the, basically this is an audit and analysis software. It has various modules where you can analyze your tally data. This software is prepared only for the tally as an accounting software being used. So it has an analytics module which will analyze the data and give you the exceptions that are there in the data. You can prepare a financial report, MIS report, and then GSTR9 and 9C is a module you can use this to prepare, right? So you can add, so you can, and again, here, the way this is designed is the way we create our tally data. In fact, if you look at how the data in your books of accounts, in your software that you handle, so generally we create the data in a data folder, and we create various subfolders, put all our data. So likewise, which means there is a group and there are companies in which, so the company is what you will be using for the preparation. So you can add a company. Let me start. Let me just start with the tally. So here is my tally. Let me open the data. Select the company. Yeah, so we can just select any one company, and this will automatically get recognized. Yeah, so we just select we select a company, and this is the company we will be using it for preparing GSTR9, right? And the advantage again, which I will say, using an application like this Tally on Wheels, is it will read the data from the books of accounts, and wherever those exceptions are there, it will be reporting. So in this entity, I'm adding a company, and I'll click on add a company. If you are a first time user, it will ask you to download an agent which will help you to connect. I will say, I'm saying add, there is a tally company which has been added. So TO or demo, I'm saying add this demo. I'm preparing for the financial year 21-22. So I'm just selecting 21-22 and I'm saying sync. So what it is doing, it is fetching the data from the tally while it is fetching all the vouchers from the tally. This will help you to analyze the data. In case you say that, okay, my books of accounts are audited, I don't need to analyze further. No worries. You can directly get on to the GST module. You can, let me just go to home page, select this entity, which this is the entity which we have uploaded. TOWR9 demo. This is the company. TOWR9 demo. So this is the company I have selected, and I would want to prepare GSTR9. So I will go to GSTR9 and 9C preparation. You can look at the module just below the add update company. I will say GSTR9 and 9C preparation. Now, this, as I said, if we go back to our presentation, where for filing GSTR9, what is the information that we require? We require the data from books of accounts and the data from the government portal. So all this information is required to finalize your GSTR9. So as a first step, I'm going to get the data from the government portal. So we have an association with GSTZN, who is a GSP, who will assist in fetching the details. So you have to enter the username of the portal. I'll confirm the username. So using which it will fetch the data from the government portal seamlessly. And GST government portal gave an invalid response. Okay, let's try once again. I hope should work. Yeah. So sometimes technology, we never know what errors would come up. So there you will be getting an OTP. Let me just, this is a one-time activity. You need to enable the OTP and so using this OTP, you have now logged into the government portal because we need the data. So you can just click this one button and download from the government portal. I am saying yes. What am I downloading? GSTR9 written summary, GSTR9 previous year data, GSTR1, all the sections. By the way, you can see it is seamlessly downloading in one go. If manually you have to do, you have to go to each month, click a button. It says wait for 15 minutes. So 12 ones, 12 3Bs, you download PDF, put into Excel, all those things. This is going to do all the job for you. GSTR1, GSTR3B, GSTR2A, and 2B. All the information in on a click of a button, you can see it is getting downloaded from the government portal, which is seamlessly. Once this download happened, so which means I got my first set information from the books of accounts has come in. The second, I have to do an invoice level reconciliation. At this point, I would want to do a purchase register. I will say upload my purchase register. So I'll click on upload the purchase register. This is the beauty of, again, using a software. So the software will automatically recognize what tally data is there. And this data, it is selecting the vouchers between 21, 22. It is importing from the tally. Because you got to do a reconciliation of your purchase, which is booked. When I book it in tally, I would have booked as a purchase journal, could be directly a payment, could be a journal, could be a stock journal. My GST input tax could be created in different way. I could have also posted in such a way that I have not activated a statutory module and I'm not exactly routing with like GSTR2. It could have been captured in any way. Again, the tool has an advantage. It will try to correlate and get the information. So all the data has been uploaded. I can download the XLS in the meantime just to see that. And I can also confirm and save these entries. So it will import this into the GST purchases data to the software tally on. So I have got the government data, I have got the books data. I'll continue preparation. In the meantime, let us see the Excel that we have just downloaded from the government portal. My downloads. Yeah. So here is the data purchase tally purchase register downloaded at 3:43. Let me just open this file. You can see the purchases and the purchases it is giving me basically right now this is only tally data. Yeah. So it is giving me my supplier GST and supplier name, which head I have created in tally. Users could have created whatever the category grouping, subgrouping, the parent and the ledger type. It is saying whether it is a fixed asset or what is the ledger type, invoice number, invoice date, taxable amount, and including the narration, everything is here. And it is also giving me a trial balance. Whatever is my trial balance, it is extracting my trial balance and giving it. It is also doing a reconciliation. Okay, these are the items which are there in the trial balance. These are the items which are there in the trial balance. And These are the items that are there in trial balance, and these are the items which is there in my taxable turnover or not there. So if there is any difference, you can easily correlate. Roughly around 7 crores is my purchase. So it's saying around, I found, let me raise the headers. So for this ledger, purchase ledger, I have 1 crore 57, which is there 5%. Yes, I'm able to match with, this is the trial balance figure. This net is your as from trial balance. This is from your GST journal register. So they have it, the tool has rolled up the trial balance and the GST journal. Some of the indirect expenditure GST was not booked. Some of the expenditure, direct expenditure, it has booked. So it is giving you a breakup where it has booked and where it has not booked. So that is where I have mentioned what is important in your input tax credit freezing is expense analysis, expenses with GST and without GST, so that you can verify your RCM. So that is what this job it has done. Once this is done, so you go back and click on this run GSTR9 matcher. Now GSTR9 matcher will be doing a kind of an intelligent job of what should be your values for R9, because the books data has been taken and the government portal data has done. So now you can just click on this button called download 2122 GSTR9 preparation. Another beautiful Excel that you will be able to download. Yeah, now the file has been downloaded. Let us go and see this new file which we have and understand what is the GSTR9. It has downloaded and it has prepared. So let me just open the file. Yeah. Yes, the file got open. And all this expenditure which we have downloaded, everything, the trial balance, we have just seen the trial balance. So this the same thing, everything it has integrated. Let's first understand what is there in it. I'll go to home page. So this file has GST returns data as per GST returns. So which is again more important, you need to know what is the data which is there as per GST returns is required. GSTR 1 summary, 3B summary, 1 consolidated, 3B consolidated, 1 by filing period, 1 by customer, all this information is there. Then it has an information of how much is the liability as per books and 3B, GSTR 1 and 3B, 2A and 3B. The expenses versus GST ITC credit, all the reconciliation report is there. GSTR 9 related, how much is your GSTR 9 summary that you need to file, and the turnover computation and ITC computation. There is a raw data and the trial balance. You can see everything is linked. You just click on this, you go to that section, that place. Click on home, you will come back to this. So let's quickly see what are all the various information. So GSTR 1 summary for the full year, whatever is the value of GSTR 1 table wise, it has summarized and given. So in one view, I have whatever is the summary for the full year, this information is there. And GSTR 3B likewise, various tables in 3B, it has summarized and given me. What is there in my one consolidated? The same value is taken month over month. Table 4A, 4B, 4C, April, May, June, July. The various sections that is required, you have all the information from various sections, it has brought it. GSTR 1 by customer, this is Again, a beautiful information where the detailed line item reporting that has been done in GST, that information has come. Then you have GSTR1 by filing period. See, this is the beauty of the software. Again, in the audits, we also want to look when is my liability liable and when I have discharged. You can see the correlation which has been done here. For the month of, let's say, July, my turnover, something is reported in July, a portion is reported in August, and something in September. So for a month, I have to pay interest on this. Again, in the month of November, I will have to pay an interest. So the software has an ability to compute and do this. Again, this can be done, of course, depending on the volume of the data. For the purpose of demo, I have taken a company with 7 crores and small amount so that I can seamlessly complete all this. It may take anything between 3 to 5 minutes for the system to compute and do all this analysis. But according to me, it is worth waiting that time so that you have a holistic view of all the information. So you have all the reconciliations that you need to be using for filing. You have all the information. Then the reconciliation, GSTR 2A versus 3B. So how much is there in my 2A? How much I have claimed month over month? Did I claim extra? Is there a difference? All those reconciliation is also there. Let me go back my home. What I'm more important in is GSTR 9 preparation. So GSTR 9, I want to know how my GSTR 9 values are coming up. So you can see, let me zoom it for the purpose. You can see GSTR 9 has been prepared by the tool. I am not saying that this is right and this can be filed straight away. Then if we think that systems can replace human beings, then that's again a myth. But it has done to the best possible, whatever it could do, it has done it. How did we get this information? You can see all these are, by the way, all these are linked. You can see there is something called turnover computation. It has coming from the turnover computation one place. Again, let's go the turnover computation. How did it compute? It has brought what is the value of GSTR1 summary. I can expand all the line items that we saw. This is your GSTR1, and this book indicates it is read only. That pen indicates that read and write. You can, whether you want the data to be edited, whether it is formula driven or I'm expecting you to put some value. So I have the turnover as per books, as per R1, as per 3B, then as per audited financials. From where did I get? I have, you can see this has automatically brought it from my trial balance. So from trial balance, it has grouped. So I have the turnover. This turnover, I have to segregate into GSTN wise. So this is my first GSTN. If I have other GSTNs, I can segregate it. Ideally, people maintain books of accounts, one GST and one tally, but exception cases, we never know. But if you have, you can also split. Once it is split, you have to make adjustments between the books of accounts and for the purpose of your GST. You might have, you might want to add certain items, you want to subtract certain items. A list has been given, we can use it. Any other adjustment, 1, 2, 3, you also have adjustments upward and downward. Once this is done, you derive that value, you look at how much of these transactions are taxable and how much are not taxable. This taxable is also segregated between rate wise. Now here you can clearly see there is some negative. How did this negative come up? If you see the turnover which is there in the books of accounts is 7 crore 94. While it is there in your GSTR1, it is 7 crore 69, which is saying summary. But when you go to the details, so there were some amendments that were carried out, which were not affected in your 3B, the credit notes. So the line wise, rate wise, if I go, the 8 crores is showing at 5%. Somewhere the SSE had made a mistake in GSTR1, which he failed to correct it in the subsequent tax periods. The same is automatically segregated between how much is B2B, exports with payment, SEZ with payment. All this segregation is done by the tool automatically. And it is now comparing of which 7 crore 94 that you are supposed to pay totally. So you have to pay 21 lakhs IGST 4.28, 4.28 you have to pay. And how much you have paid, how much you have short paid, that workings is also given. Likewise, ITC, it is giving me how much of my ITC which is there in the books of accounts. So basically, it is left for the users to do the data entry, and wherever it is blocked, it is graded out. So users, an information has been given, whether you have to do a user entry, what needs to be done, information has been given. Kind of, this is your working ground. You just prepare your working ground. These values are automatically linked to your GSTR9. These values table, all the tables, and just hit on the, yeah, all these tables are linked to your GSTR9. By this, your GSTR9 is ready, including, according to the tool, you have short paid the taxes of IGST, CGST, and SGST, and some 47,000 ITC you have not availed in CGST, SGST, and in case of IGST, you have availed excess which you need to reverse. Again, this is what the tool is giving. From where is it coming? You have all the workings. You can just hit the thing. You can automatically see from how this information is derived. This is all formula driven. Basically, how much is there in the books? How in 3B, how much is matching, not matching? All this reconciliation this has done. You can change these values. It's an Excel file, and we are masters in Excel. We can change these values. Once this is finalized, you can just print and see, is this what you want to file it? And then you can go ahead and fill the values on the government portal and file the return. So with this, we have come to the end of my presentation, and let me just see if I have, yeah, yes, so that's it. Yeah, so with this, we have come to the end of the presentation. In case if you have some queries, you can always reach out to the Tally on Wheels support at Tally on Wheels. Here is the contact information. You can reach out to them for any more information. Let me see if there are any questions in the chat box, and feel free to put your questions in the chat. You can unmute yourself and ask. Bhaskar has asked, GSTR 99C due date is 31st December. Yes, sir, that's right. As of now, the date is December, and I don't see any reason why there will be an extension. Chirag, please send this module PPT. Yes, all the registered participants will get a copy of the presentation. If we have incorrect ledger configuration in Tally with intelligent matcher works, Srinivas Prasad sir, I would say mostly yes. I'll not say 100%, because it will try like a human being. If someone is asking whether this is an GST ledger or not, whatever it can identify, it will do. So this brings to me a question that why should I use Tally on Wheels for GST audit? Because people will configure wrongly in Tally. The Tally and Microsoft Excel has a good connection. It is like you want to insert a line in Excel, you just select and Control plus, line gets deleted, Control minus, line get deleted. Likewise in Tally, Alt 2 voucher is created, Control D voucher gets deleted. You on the fly, as you are entering, you press Alt C, create some ledger. So the data can be handled anyway. Now, if manually, whatever which the Tally on Wheels, the Excel, it has prepared and it is there right now in front of you. If manually one has to prepare this Excel, In a normal case, it will take 15 days for someone to prepare, construct that Excel and take a decision. So the tool is not just constructing an Excel, on top of it, it is preparing a reconciliation and it is saying what is the likely value that you need to use for filing. So that is where I'm saying it's a quickest way of doing it. I'm not saying that the GSTR9 coming out of this is the final. I would say it is 90-95%. It is saying that these are the values basis the books of accounts that you have maintained and the values that are there in the portal. Either you may have to correct the portal, either you may have to correct the books of accounts. But holistically, the tool is bringing all the information and putting it one place. That is the objective of this tool. And any more information that you would want, you can always reach it here. And in fact, the price of the tool is very very nominal. I think it is around 200-250 rupees per company that you process. Today, the tools have become more intelligent and more efficient, which can assist in the data preparation. In fact, what is costly is our time. If we can get our time, we can actually spend even more qualitative thinking when we have time. But if we are crunched that on one day you have to file some 4-5 returns and you don't even know what is there in government portal, what is there in the books of accounts, from where to start, then tools like this definitely comes to an aid. Yeah, any other questions, participants? Good, we are bang on time. We've completed at 4 o'clock. However, in case if you still have any questions with regards to the tool, you have the support number and the email ID. You can reach to these numbers. In case if you have any questions on GSTR 9 and 9C, which you need more clarifications, then you can reach it to me, venu@vnv.ca. On this note, I conclude the session.